Hi, everyone. Welcome to the Get to Know Your Federal Financial Regulators webinar. This is the first webinar in a September and October webinar series discussing approaches to combating elder financial exploitation. This webinar will be recorded and shared with registrants after today's session. For today's webinar, there are a few pods in Adobe Connect that you may use. On the bottom left hand of your screen is the Q&A box. Please send content-related questions for the presenters to this box that we'll ask during the Q&A portion. In the middle of your screen, you'll see the EFPRN FAQs and links. This has answers to common questions as well as links to important resources. Next, you'll see the chat. Feel free to introduce yourself and tell us where you're calling in from and which organization you're with. I'd now like to welcome Lisa Schifferle, Senior Policy Analyst of the Office for Older Americans at the CFPB. Thank you.
Thanks so much, Nicole. And hi, everyone. Welcome to the CFPB's Elder Justice Webinar Series for September and October 2023. As Nicole said, today's webinar is called Get to Know Your Federal Financial Regulators. So today in this webinar, what we're going to hear from is agency representatives will discuss their agency's roles as partners in elder financial exploitation prevention and response. They'll also share free resources for older consumers, account holders, and financial caregivers, and we'll discuss how state and local elder justice organizations, networks, financial institutions, and law enforcement, all of you on this call, how you can work with your federal financial regulatory agencies. So before we begin, we do have to give a disclaimer, which is that this presentation is being made by a CFPB representative on behalf of the Bureau, but anything I say during this presentation is my own opinion and not necessarily representing the Bureau's views. So today on our agenda, you will learn about the Federal Financial Institutions Examination Council. Basically, we'll explain what do we mean when we talk about federal financial regulatory agencies. And we're going to hear from three of those federal financial regulators, the CFPB, OCC, and FDIC. And then at the end, we'll take questions and answers. So do feel free to submit your questions and answers or your questions in the question box, and we will try to answer them at the end. So as Nicole said, my name is Lisa Schifferle, and I'm a Senior Policy Analyst in the CFPB's Office for Older Americans. I will be doing the presentation about the CFPB, and I lead a lot of our elder financial exploitation prevention work, including our Money Smart for Older Adults work and our financial caregiving or managing someone else's money work. I also support Jennifer Duane, who many of you may know, on the Networks project that this webinar is a part of. And before CFPB, I worked as a lawyer at FTC and Maryland Legal Aid. With me today, we are very excited to have two other speakers, Louisa Quitman, who is a community development expert from the Office of the Comptroller of the Currency. Louisa leads the OCC's Financial Health Vital Signs Initiative. She has also led policy development and coordination related to financial education, savings, and other topics to improve the financial security of Americans, especially lower wealth and historically underserved communities. So you will hear from Louisa. After you hear from me, you'll hear from her about the OCC. We're also very pleased to have with us Ron Howriggy. He is with the Federal Deposit Insurance Corporation. He's a community affairs specialist in the Consumer Financial Education section in the DC office of the FDIC. Ron has a diverse range of experience in outreach and community development. And at the FDIC, Ron currently serves as project manager for the Youth Banking Network. And I've also had the pleasure of working with Ron on the Money Smart for Older Adults curriculum, which he and I will both discuss later on in this presentation. So now that you know who we are and who you will be hearing from, we'd like to ask you a couple polls to find out a little more about who you are. First of all, how would you best describe your organization? Are you with law enforcement, APS, AAA, payments industry, financial institutions, prosecution. And then in the second question, if you do belong to a financial institution, please let us know which type of financial institution. And we'll give a few minutes, and then when Nicole thinks that there has been enough time for people to answer the poll, we will view the results. Okay, so it looks like I'm seeing people from APS, AAAs, mainly state charter banks for the financial institutions. And I think we can close the poll now. It looks like Nicole has closed the poll. Nicole, do you want to let us know any more about the results that we're seeing?
No, Lisa, you covered it. I'm moving back to the main chat, but if people want to continue to share where they're calling in from, you can do that there.
Okay, great. Thanks so much. So let me start by giving you a little overview about the Federal Financial Institutions Examinations Council, or the FFIEC. There are 5 organizations in the FFIEC, and we're fortunate to have 3 of those here with us today. So what is the FFIEC? And the reason we are focusing on FFIEC as today's webinar is about federal financial regulatory agencies. So the FFIEC is a federal interagency group made up of different federal government agencies that make recommendations and policies about supervision and examination of financial institutions. They also run a school for examiners, bank examiners or financial institution examiners, which is open to federal and state agencies that supervise financial institutions. And on the next slide here, you'll see a list of the federal financial regulatory agencies, and that's what we're here to talk about today. They include the FDIC, OCC, CFPB, those 3 of which you'll hear from today, as well as the National Credit Union Administration and the Federal Reserve Board. Of course, there are other federal agencies also involved in prevention and response of elder financial exploitation, including the FTC, Secret Service, DOJ, HHS, SEC, and more. But today, what we're really focusing on are the federal financial regulatory agencies and their roles. So that's why we're starting with this overview of the FFIEC, just to frame it in terms of those financial regulatory agencies. So, like I said, we'll hear from 3 of us today. I'll kick it off with CFPB, and then you'll hear from OCC and FDIC. So let me tell you a little bit about the CFPB and what our role is in terms of elder financial exploitation, response, and prevention. Now, as many of you may know, the CFPB is a relatively new federal agency created in 2010. And we are here to make sure that banks and lenders treat consumers fairly. We implement and enforce federal consumer financial law and ensure that markets for consumer financial products are fair, transparent, and competitive. Our agency was created in 2010 with the passage of the Dodd-Frank Act, which was drafted in response to the financial challenges that came up during the Great Recession of 2007 and 2008. So as you'll see on this slide, we pride ourselves on being the agency that is on your side through life's financial moments, even the tough moments like the Great Recession and other financial challenges like the pandemic. The CFPB has a variety of core functions that are listed here. We achieve our mission through these core functions, and our work includes rooting out unfair, deceptive, or abusive acts or practices by writing rules, by supervising companies, and by enforcing the law through bringing cases in court. We enforce laws that outlaw discrimination in consumer finance. We also take consumer complaints, and I'll talk more about that at the end of my presentation. We do financial education. We research the consumer experience, and especially in relation to financial products, and we monitor financial markets for new risks to consumers. If you were on our earlier webinar series, you would have heard about some of those efforts, including our research on recovery from elder financial exploitation and what are some of the factors that affect when people get their money back if they do experience elder financial exploitation. So an important thing about the CFPB is that we really do value insights and input from people like you who are on this webinar. We see stakeholders as very key because you're not only a channel for dissemination of information, but you also can help us identify emerging issues and data needs and help inform regulatory needs and the impact of actions. So we do encourage stakeholders to let us know what you're hearing and seeing. The circle on the right shows how stakeholders might reach out to a point of contact at the CFPB to highlight an emerging trend, which can then be referred to the appropriate part of the CFPB for consideration for a possible CFPB action. So please do let us know what you're hearing and seeing, and we'll give you more contact information about how to do that later in the presentation. Now, I want to tell you about the Office for Older Americans, where I work and where the Networks project is run out of. In the Office for Older Americans, that was specifically created in the Dodd-Frank Act when our agency was created. And it mandates that we collaborate with others in the aging field, like all of you. So this webinar today directly relates to that mandate. In the Office for Older Americans, it's our goal to help protect older consumers from financial harm and to help them navigate key financial moments as they grow older. We also identify emerging trends and coordinate efforts with other federal agencies. So let me tell you some examples of how we do that when it relates to elder financial exploitation prevention and response. One of the main initiatives of the Office for Older Americans is to combat elder financial exploitation, including fraud and scams. So this slide sets a stage by showing some interesting data about older adults and scams. This is from the FTC's Consumer Sentinel data. And as you'll see here, contrary to what many people believe, younger adults are actually more likely to report losing money to scams than older people. So that gets rid of that myth of the older, vulnerable consumer. However, it's also important to note that when older adults do lose money, they report much higher dollar losses than younger people. So on the right, you'll see a median loss of $1,500 for people over age 80 compared to only $500 for people in their 20s. So you can see from this data why it's really important that we do focus on this issue of scams and fraud affecting older adults. This next slide shows the same trends about age and reported loss. If you look at the yellow line, you'll see that as people get older, they're less likely to report losing money to a fraud than younger people. But if you look at those blue-green bars going up as you go to the right, you'll see that the amount of reported loss rises with age. So based on reports to the FTC, younger people are more likely to lose money to a scam, but older people suffer higher dollar losses when they do lose money. And so it's in this framework that we have the CFPB's Elder Justice Network program that this webinar series is a part of. This is one of our main initiatives to combat elder financial exploitation. And before I get into the initiative, I just want to take a minute to say what is a network in terms of when we're talking about an elder justice network. If you were on our earlier webinars, you would have heard a lot about this, but basically we're just talking about a network in terms of a sustained and voluntary collaboration or effort or partnership that works together to detect and prevent and respond to elder financial exploitation. So we say it's sustained because it's not a one-time event or a meeting, and it's largely voluntary because often it's distinguished from state-mandated multidisciplinary teams or similar interagency protocols. These are just groups of people coming together to work to combat elder financial exploitation. And there are a lot of benefits to the networks, as you see here on this slide. They can increase reporting, improve response, enhance skills and capacity to address financial exploitation. They can increase education in the community, and we know that the more people know about specific scams, the less likely they are to lose money to them. So these are some of the many ways that these networks can come to play. And that's why we work so hard at CFPB to try to help networks develop. And we actually have created an entire elder justice network development guide, which you can find online at consumerfinance.gov/elder networks. This is a web-based guide that includes extensive materials to help people mobilize a plan and convening a network, whether you already have a network. If you have one already, it'll help you build that network even stronger and bigger. And if you don't have one, this will get you started from the ground up. It includes a lot of user-friendly planning materials, sample invitations, a facilitator guide, worksheets, and a whole lot of other information to help you form and grow a network. So really, this is a pick and choose type of guide. It's not something that you have to follow from A to Z, depending on where you and your community is and whether you have a network or are growing a network. You can look through this guide and pick and choose to implement different things based on the needs of your community and your stakeholders. So we hope you will check it out at consumerfinance.gov/elder networks. Now, this slide shows some of the places where the CFPB has helped support network convenings, and these lessons from the convenings that we have held are available to others to learn from and to replicate the successes. If you go to consumerfinance.gov/elder networks, you can find out more about them. And if you read our recent blog, you can find out more about lessons learned from recent convenings. So we hope that people will take the guide and the information and start and grow networks in their communities. That's one of the many ways that the CFPB, as a federal financial regulatory agency, works to combat elder financial exploitation, and one of the ways you can work with us. Another way is Money Smart for older adults, and I'm not going to spend too much time on this because I know Ron's going to tell you more about it, but this is an award-winning campaign that we developed along with the FDIC. They help older adults identify scams, fraud, and exploitation. It has instructor guides and resource guides and is available in English and Spanish, and you'll hear a lot more about it from Ron during his presentation. At CFPB, we also have a bunch of fraud prevention handouts, and we're excited to say that these are actually now part of the Money Smart series as well. They've been co-branded as well, and these are free fraud prevention placemats and handouts. They were originally designed for meal delivery programs to hand out, but now we have them in a variety of different formats for different people to use about a whole host of scams, from grandparent scams to online safety and identity theft. A good way to use these materials that are all free in your community. You can go to consumerfinance.gov/order to get them. We also have a resource that you'll see here about preventing elder financial abuse in nursing homes and assisted living. This is a guide to help nursing home and assisted living administrators and team members prevent and address financial abuse of their residents. It's designed to help staff identify warning signs that might indicate financial exploitation and to develop policies, procedures, and training to prevent elder financial abuse. We also have companion guides for family and friends of people who are in assisted living and nursing homes to help them protect their loved ones from financial exploitation in those long-term care settings. And I also want to let you know about our Managing Someone Else's Money guides. These are another great elder financial exploitation prevention tool. They are guides for financial caregivers, for people who are helping family members and friends manage their money when they're unable to do so. So we have guides for people who are serving as agents under power of attorney, if you're serving as guardian, if you're serving as a trustee, or as a government fiduciary like a Social Security representative, payee, or a VA fiduciary. These guides provide tips and resources to help people know how to manage money for a loved one. So you can check these out at consumerfinance.gov/MSEM, like managing someone else's money. They also have a lot of warning signs about financial exploitation. And these are also now part of the Money Smart for Older Adults curriculum. So we're very excited to have the three-pronged approach to Money Smart with the original Money Smart, the placemats, and managing someone else's money. So as you can see, that's a whole host of financial literacy and financial education and outreach materials that we have in order to try to help networks and others to combat elder financial exploitation in their communities. In addition to our policy and outreach work, the CFPB also brings enforcement actions related to elder financial exploitation. And this slide talks about one of our recent cases. In the Brightspeed case, we brought a case against payment processors who knew they were processing payment for tech support scammers who were stealing money for older consumers. So you may have heard about the tech support scam where a pop-up comes on your computer or you get a telephone call saying that you have a virus and you need to spend a lot of money for some expensive software, or maybe they'll say they need to remote into your computer to fix that virus. Well, these tech support scams were targeting a variety of consumers, including older adults, and Brightspeed was processing the payments for the tech support scammers, knowing that these criminals were using their platform to do this. So the exciting and significant thing about this case is that we sued the payment processor and got a $500,000 penalty. So this was our first case against a payment processor, showing third parties like Brightspeed that the CFPB is not going to stand by if companies let criminals knowingly use their platforms for fraud and scams. Another example of enforcement actions is the Nation Star mortgage case. This is the case that the CFPB worked with attorney general's offices from all 50 states and the District of Columbia and Puerto Rico. And Nation Star basically broke its promises to consumers by foreclosing on borrowers while their loan modification and loss mitigation applications were pending. And as a result of this case, the court order resulted in $85 million for consumers. That's money going back to consumers who lost their homes or lost money, in addition to $6 million in fines and penalties. So that's a very significant award there, and an example of how the CFPB uses enforcement actions to stop elder financial exploitation and other financial exploitation as well, because that was more than just older consumers. It was a whole age range of consumers there affected by Nation Star. So in addition to enforcement, policy, and financial education, the CFPB also takes consumer complaints at consumerfinance.gov/complaint or by phone at the numbers you see on the screen. So if you know someone who's having trouble with a lender, a credit card company, credit reporting agency, or some other consumer financial product or service, we do encourage them to first reach out to that company first to try to resolve it directly. But if that fails, then they can file a complaint with the CFPB and we'll send that complaint to the financial institution. Usually we get a response in about 14 business days. So sometimes people will find that even if they've been trying to get some relief from the financial institution, once that financial institution gets a complaint from the CFPB, they may pay a little more attention and make sure to get back to the consumer about their concern if they have not already done so. So we hope that you'll think about all of these parts of the CFPB when you are combating elder financial exploitation in your communities. Think about the network collaboration, the policy, the education, the enforcement, and the complaints. And together, we can work together across the country to try to combat elder financial exploitation in your communities. So with that overview, I'm going to turn things over to Louisa Quitman from the OCC to tell you all about her agency's role in combating elder financial exploitation. Louisa?
Hi, everyone, and thank you, Lisa, for that introduction and for inviting me to participate with you all today. I don't know if you have my camera, but you don't need to see me. It's okay. So what I'm going to do today is talk a little bit about how OCC processes consumer complaints and start where Lisa left off, as well as our resources about fraud and about community reinvestment and community affairs. So let me start with the first slide, just providing an overview of the OCC. The OCC charters, regulates, and supervises all national banks and federal savings associations and supervises and licenses branches and agencies of foreign banks. Currently, we supervise 1,067 banks, as I'll refer to them, with $16 trillion in assets. This is 65% of the total assets and about 73% of credit card balances in the country, to give you a sense of what we do. The OCC was established in 1863, so another time of crisis, unlike the CFPB, as an independent bureau of the U.S. Department of the Treasury by the National Currency Act. The National Currency Act of 1863 and the National Banking Act of 1864 were intended to create a safe, sound, and reliable and banking and monetary system. You see President Lincoln there signed those legislation into law. So the OCC ensures, if you want to go to the next slide, the OCC ensures that national banks and federal savings associations operate in a way that's safe and sound, provides fair access to financial services, treats customers fairly, and comply with applicable laws and regulations. And we do this through the power to charter banks, write rules, examine banks, and take enforcement action. As well, we are committed to ensuring banks that serve their entire community through fair access to credit, capital, and financial services. So my next slide talks about common scams, and Lisa just touched on them, but we certainly see them through our banks as well. So I think we can just skip ahead to the next slide. Let me spend a little bit of time talking about our complaints process through our customer assistance group, or what I'll call the CAG. The CAG has responsibilities set out in the Federal Trade Commission Act of 1974, and the primary goal is to process and resolve consumer complaints which fall under our jurisdiction in an objective and expeditious manner. And we assist customers of financial institutions that have complaints or other concerns related to applicable banking laws, regulations, and facilitate communication between banks and their customers. And, as Lisa alluded to, the CFPB has certain responsibilities for complaints. The OCC has primary responsibility for complaints with banks less than $10 billion in assets and certain complaints against banks above $10 billion in assets. While we attempt to resolve consumer complaints, we don't provide consumers with legal advice. We don't act as a court of law or a lawyer on the consumer's behalf, and we don't become involved in complaints that are in litigation or have been litigated, or advocate for either party, or seek specific monetary compensation. So those are some of the do's and don'ts of what we do. Let me go to the next slide. So you'll see here, we talk a little bit about an inquiry. That's a general question about a banking issue or how we work. But let me talk a little bit more about complaints. First of all, we provide assistance to the public via a call center, and as well helpwithmybank.gov, and you'll see that on the next slide. Our call center takes questions and directs them to the website where consumers can get additional information, and we can also provide information through the call center on how to file a complaint, provide status information, and take requests for return calls. You can also check your status through helpwithmybank.gov. I will note that only written complaints received from the customer is sent to the bank for a response. We cannot process a complaint that references several banks. In that case, if we get one of those, we'll reach out to the customer and ask that they submit one complaint per bank. We also won't send complaints to a bank submitted by a non-customer. If a complaint is submitted on behalf of a customer by a family member or a friend or an estate, you need to include proper authorization, such as a power of attorney or a written and signed statement from the account holder providing authorization. So let's go on to, I'll talk a little bit about how to file a complaint. You'll see we have an online portal. You can fax it if you still have a fax machine, and you can certainly mail it. So a few things. We definitely encourage consumers to first visit the website and verify the financial institution is a bank that the OCC supervises. If not, you can contact the appropriate regulator, such as the ones on this call. As well, if we do get a misdirected complaint, we will also send it to the right regulator. Just a couple of things on the online form. It has a 4,000 character limit and a time limit of 30 minutes. So we do suggest that complainants gather all the information necessary before they start filling out the form. If they have supporting documentation, they can mail it or fax it to us. And they should make sure that they have complete contact and mailing information on the complaint as well. And obviously this is on the form too. We need the name and address of the bank, the type of the account involved, any account numbers, transaction dates or amounts, a brief statement of the fact and desired resolution. And then as well, they can provide any supporting documentation. Again, an explanation of what action the bank can take to provide a satisfactory resolution is very helpful to us. We facilitate communication between the customer and the bank in order to resolve the complaint. That doesn't mean we can solve all concerns. Sometimes a complaint relates to a factual or contractual dispute, which is outside of our purview and only a court of law can resolve. And some complaints involve issues covered by the bank's internal policies, which may not be governed by federal laws or regulations. So those are things to be aware of. Okay, so let me go on to the next slide about what happens next. And again, all of this is on the website, so you can certainly refer to that as well as refer to these slides. But basically for online complaints, we do send a confirmation email acknowledging a successful submission, and we'll provide a case number generally within 24 to 48 hours. If it's received by mail or fax, those are usually processed within 5 business days, and we send out a letter with a case number once we've processed it. Pretty straightforward. Okay, so let's go on to the next slide. What happens next? Once the complaint is reviewed by our team and determined to be complete, it is forwarded to the bank for a response or referred to the other regulator. On average, the customer should receive a written response from us within about 60 days from when we get a complete file. And our written response is based on the documentation in the complete file. In most cases, the bank will respond directly to the customer and copy us. If the customer receives that response directly from the bank, they really need to carefully review the correspondence and any actions taken. And if they want to provide a rebuttal to the bank's response, it should be sent to us as soon as possible. If the bank responds directly to us, the tag, a summary of the response will be included in our response to the customer. And if the bank has satisfactorily addressed the customer's issue or concern, no further action is required. And I will say, those of you who are interested in how we resolve consumer complaints and our data about the numbers, the products, and the amounts of resolutions, that is also on helpwithmybank.gov under consumer complaint data for those of you wonks that like to look at that sort of thing. Okay, so the next slide just talks about the appeal process. Again, this is on the website too, but customers can appeal any finding of their complaint. There's 2 levels of appeals. The Tier 1 appeal should be submitted no later than 60 days of our closeout letter and should include the specific issue and why the consumer disagrees or any additional documentation that supports their position. That is reviewed through our process, through a manager, and if it's still not satisfied, the customer can also appeal through our ombudsman. Once the customer has been through all 3 levels of review, they are considered to have exhausted all avenues of appeal, and we won't address any further complaints for the same fact pattern. So hopefully that is helpful information to you. So that is the overview of our complaint process, and hopefully that's helpful to you. And it's certainly, again, all on helpwithmybank.gov. In addition to that process, the OCC has resources on fraud for banks and consumers. We know that fraud is a significant risk for the financial sector and for its consumers. And we know this on a regular basis in our semi-annual risk perspective. We also are examiners when they're looking at the safety and soundness of banks. They look for frauds and risks of frauds. And our operational risk fraud management principles provides guidance to banks on fraud risk management. And the OCC also has resources for banks and consumers on specific types of fraud. For example, we know that banks are seeing an increase in check fraud. And as many of you may know, on February 27th of this year, the Financial Crimes Enforcement Network, FinCEN, issued an alert that discusses the surge of mail-related check fraud, provides an overview of check fraud schemes, and emphasizes the need for banks and financial institutions to identify and report check fraud. And the alert also highlights red flags and the reporting requirements under the Bank Secrecy Act. And if I maybe, and when I finish talking, I can put the link to that in the chat if you all don't have that. So those are just some examples of what we have on fraud resources. The next thing I do also want to talk about is the fact that we also work on an interagency basis. I mean, that's why we're here, and Lisa alluded to that. And so you may be aware of an interagency guidance on privacy laws and reporting financial abuse that actually came out back in 2013. But it's important to be aware that this guidance is still useful and important, and guides how financial institutions should report on financial abuse of older adults. It clarifies that financial institutions may generally report on suspected elder financial abuse to appropriate authorities, and describes possible signs of elder financial abuse. I'm guessing if you're on this call, you probably are familiar with this. So let me talk about one other thing that you may not be familiar with, which on the next slide, which is the Community Reinvestment Act and Community Affairs resources. I know there's a lot of banks on there, so many of you may be aware of this. The Community Reinvestment Act of 1977, also known as the CRA, if you want to go to the next slide, encourages banks to help meet the credit needs of communities in which they are chartered, including low and moderate income neighborhoods. Under CRA, financial education to low-income seniors or donations to organizations that conduct elder financial abuse and identity theft prevention programs can be eligible community development service activities. In my office, the Community Affairs Office supports OCC's mission by helping banks provide community development financing and financial services to underserved communities and consumers. Community Affairs conducts outreach and develops publications, provides training and technical assistance to banks, community organizations, and others. And we facilitate communication among lenders, community groups, and government officials through workshops and conferences. So you'll see some examples of our resources in this link, and those are links: our financial literacy resource directory, our financial literacy update, which is released quarterly. And importantly, we have community affairs officers around the country who can promote partnerships between banks and community stakeholders. And if you're not working with them, I do encourage you to reach out to those folks who can help bridge the gap between financial institutions and community organizations. And you can see where they're all located. So, and that, the many more resources are at that link. That's why I put it out there as a link and not just something that you can click through. So I'll just wrap up there to, point out that the OCC really is focused on making sure that the banks that we supervise are serving all of their consumers in a manner that's safe, sound, and fair, and that it is protecting against, frauds that are both risks to consumers and to the system as a whole. I can go back over any of those things in more detail, in less detail, but I will wind up there and turn it back over to Lisa.
Thanks so much, Louisa. And next we will hear from Ron at the FDIC about their agency's role.
Thank you, Lisa. Louisa's done a great job identifying some of the most harmful scams. But I just note that our Money Smart for Older Adult product that we'll be getting into, that Lisa already mentioned, identifies some other important scams as well. And while I'm on that point, I think it's safe to say that our intent in creating the MSOA product was not to identify all conceivable scams, but instead to provide champions like you with ideas on how to respond to both the scams of today as well as the scams of tomorrow. Louisa also fairly articulated the views of the regulatory banking community with respect to the CRA and reporting financial abuse and some other items. And I can't really add any value to those themes. So I'll move on to providing some specific FDIC information that should be of use to you in your roles as champions in the older adult community. Now, these are some of the general principles for the FDIC, but the main point here is that the FDIC was created so that you would be confident that you'd always be able to get your deposits, even when a bank fails, noting, of course, the limits in the dollar amount. Here we know the guidelines on the maximum amount. So there are many ways to hold different types of deposit products: checking, savings, CDs, money markets among them, that all enable a customer to have more than $250,000 at any particular bank. The insurance coverage is defined by a per depositor, per bank, per ownership category protocol. And this slide here serves to clarify how deposit insurance works. It contains a tool by which you can input some data points and calculate your estimated insured amount. You can also order brochures to get informed on what deposit insurance is all about. And anyone can call the FDIC or submit questions online on this topic. To make sure your bank participates in the FDIC deposit insurance program, you can check at this site contained herein on this slide. If you need additional assistance from the FDIC or need a question answered or have a complaint about a specific bank, you can go to these sites. There's some potential pathways for getting a response to your concerns from our consumer and depositor assistance team. In addition to that, we have a consumer affairs team that stays on top of trends in the marketplace generally and produces helpful resources like our consumer news publication and the Knowledge Center that you can find on the FDIC website. You'll find those edifying as well. In fact, the latest edition of our consumer news publication focuses on older adult financial scams. That's the bottom link on this slide. On this slide, you'll find some other related topics that are also addressed in our consumer news publication. We have another publication called Money Smart News. MSN focuses on success stories by Money Smart users and trainers like those in the audience today. It contains many success stories as well as valuable tips on the use of MSOA. We have, for example, a story on the University of Maryland Extension program that works at senior centers. We have a bank in Chicago that partners with all sorts of organizations, municipalities, libraries, community groups, and hosts various kinds of meetings. We have a state bar association in Maryland that teaches Money Smart for older adults at senior centers across the state. collaborates with sheriffs and district attorney offices. They've trained attorneys on an ongoing basis on the curriculum. We have the Episcopal Church, an entity within that organization that conducts regional trainings that they collaborated with the CFPB on. They've trained chaplains and retired clergy who in turn reach out to district attorney offices for partnerships. We have a Family Justice Center in Guilford County, North Carolina. They call their workshop Friends Against Fraud. And in addition to teaching about avoiding victimization of older adults, they also provide take-home packets and partner with neighborhood watch organizations and senior meal sites, faith-based organizations, assisting living communities as well. We have an organization, a financial institution that trains its frontline staff and hands out the MSOA product to consumers as needed. They regularly hold lunch and learn sessions with special agents of their state's Bureau of Investigation. And aside from participating or providing MSOA materials, they supplement that with FTC, NCUA, AARP materials. So I also wanted to touch on our FDIC Money Smart Alliance program. And that's an effort at the FDIC to recognize organizations such as yours that contribute to the delivery of Money Smart to consumers throughout the nation. We have Alliance members who also provide us feedback and participate in evaluation efforts. It's easy to join. There's an online application. Now, I'd very much like to talk to you specifically more about the Money Smart for Older Adult product. It's a joint product with the CFPB. Now, the aim of the product is to help raise awareness about elder financial exploitation and to encourage better financial planning and decision making. You'll see that the content of Money Smart is directed at teaching older adults to recognize and reduce the risk of elder financial exploitation, along with some other objectives. But overall, the objective is to make older people and their family members comfortable with the idea of talking about these issues, removing the taboo, and ultimately reporting these financial exploitation scams. No need to tell this audience, but it bears shouting out to the world that reporting and early intervention are vital to preventing loss and recovering loss when possible. These are some of the topics contained in the product. And of course, you recognize that scams are constantly changing. And that's why we offer the program in Spanish as well. And it's why we include updates such as on romance scams and our COVID scam supplement. Ultimately, the program will never be able to cover all possible forms of scams. We know that. And that's why it's important to teach skills that can be applied to currently unforeseen situations. Remember, each of these segments or topics can be taught collectively or independently of one another. And that will simply be based on the needs of your particular audience. As Lisa mentioned, we're proud that the curriculum is award-winning and received the American Society on Aging award for excellence and training and education. I should know that by now, shouldn't I? Okay, here are the three components of the product. You'll be pleased in particular to note that the instructor guide and the resource guide are in 14-point font, making it older adult friendly. Finally, we want to mention that our website has changed significantly so that you can now search for MSOA topics specifically without the need of downloading the entire curricula. And soon we'll also feature co-branded supplementary materials that Lisa previously mentioned, and you'll also be able to search for those on a per topic basis. Those are placemats, posters, handouts, etc. And that's it for me. Thank you for your time. And now back to Lisa. Lisa?
Thanks so much, Ron. And thanks, Louisa. So with that overview of our three agencies, I think we are ready to take your questions. And I will invite all the presenters and myself to turn on the video feed so that we can be on video as we answer questions. And I'll invite Nicole to start letting us know what questions there are for us.
Thanks, Lisa. I'll start asking the first question. So we have some that are by agency and some for the group. So the first is for CFPB. How do people get in contact with CFPB about emerging trends or issues?
You can email us at olderamericanss@cfpb.gov and let us know what you're seeing. That email box is checked regularly and will probably be forwarded to Jennifer and me for attention, and then we can forward it to the appropriate part of our agency, depending on what it is that you're flagging. So we do get information like that all the time. There'll be a slide at the end of the presentation with that resource, but it's olderamericanss@cfpb.gov.
And along that line, is there a way that CFPB can see what types of complaints are being submitted to identify trends?
Yes, we do look at that very carefully, and sometimes we do complaint reviews looking especially by age for the Office for Older Americans, just to give people the idea of the types of complaints that you can submit to the CFPB. It can cover a wide range of things. It can be with an auto lender or a home lender if you think you're being discriminated against in lending, or if you think that they're not honoring their promises in terms of lending. It can be a student loan related issue. It can be related to a credit report, if they're not taking something off your credit report, or if you're having trouble with a credit freeze or a fraud alert or anything related to identity theft like that on your credit report. It can be related to a credit card issue. So anything basically that's a financial product or service. For the straight up fraud and scams, like say a grandparent scam or tech support scam, we'd encourage you to report those to the Federal Trade Commission at reportfraud.ftc.gov. But for those that involve a financial product or service like a lender or financial institution, bank, credit union, credit card company, someplace like Equifax, Experian, or another credit reporting agency, those are ones that can be reported to the CFPB at consumerfinance.gov/complaints.
Great. And then finally, are people able to request the placemats and different products that you mentioned, and how would they go about that?
Yes, they are all free. They're available in English and in Spanish. There's free shipping as well. If you go to consumerfinance.gov/order, that's the best place to see all of our materials and order them all.
Great, thank you. So next I have a question for Louisa. How do I file a complaint on behalf of someone else, and am I able to?
Yeah, as I noted before, probably the best thing to do is look at helpwithmybank.gov, and you can see the instructions for submitting. But in order to submit on behalf of somebody else, you do need to have a written legal authorization to represent that person, like a power of attorney. That way we know we're dealing with the right person. And it does walk you through how to fill out the form, similar to the CFPB page. It tells you what you need to have and how to prepare.
Great, thank you. And Ron, what are some of the best ways to share Money Smart with others?
Wow, that's a great question. Well, the first step, you should join the Money Smart Alliance. You'll get a lot of great ideas about how to disseminate Money Smart products or knowledge in general. That's also applicable to the MSOA product specifically. You'll be able to brainstorm with counterparts that are in the same position, having succeeded at what you're posing as a question. I'd also recommend reviewing the successes in Money Smart news publication. You'll just get a lot of good ideas. At the end of the day, it all depends on your organization, what you have in front of you, what you have to work with. So it's a bit difficult to answer that question in a generic sense. But the best way is to get familiar with the intelligence that the CFPB has gathered in general, and what we have available at the FDIC to pursue what you want to pursue.
We got a couple more questions about Money Smart. So is Money Smart currently being offered in other languages, such as Russian?
We have various languages, but principally for the MSOA right now, it's available in Spanish. And as a typical response, the FDIC responds to the demand. So if we start getting a whole bunch of requests to provide any particular product in any particular language, we'll consider that. We'll make the case here within the FDIC, and we'll try to pursue that. But at this point, MSOA as a product is available in Spanish and English.
Great, thank you. So we have some questions that are more general, open to all of you, so that can be a bit of a discussion. How can agencies help with bank imposters, including encouraging, through things such as encouraging the use of trusted contacts or transaction holds?
That's a great question. And those are issues that the CFPB is looking at. I imagine other federal agencies are as well, but we are really trying to encourage the use of trusted contacts, working with financial institutions, many of whom are also trying to encourage the use of trusted contacts. A trusted contact, for those who don't know, is just someone you name as kind of an emergency contact, so that if there are signs of financial exploitation on your account, that person would be contacted. They don't have access to any of your money, but they would just get a call saying, oh, hey, this person just tried to wire $20,000 overseas, and that seems suspicious. You may want to talk to them. So we're trying to encourage consumers to request trusted contacts, financial institutions to offer them, and everyone to use them. And in terms of transaction holds and suspicious activity reports, we also are trying to encourage suspicious activity reports for things like bank imposters. We would encourage the financial institutions, if they know about it and learn about it, to file a suspicious activity report. Obviously, it's in the bank's interest too to not have scammers and criminals impersonating them. So we do have a series of publications, which we'll show in slides at the end of this presentation as resources about suspicious activity reports and what financial institutions should do and when they should report things like this. I don't know if Louisa or Ron, do you want to add to that at all?
I don't have anything to add. I think you did a great job on covering that.
Yeah, and I'll just add that, the suspicious activity reports are governed by the Financial Crime Enforcement Network, or FinCEN. If you go to FinCEN.gov, you can see the guidance that they have put out to financial institutions. And, in some cases, they have put out guidance that does include red flags and tips, not just, the cut and dry of how to report. So I know Lisa's team has worked closely with them on the elder financial exploitation work, and it's a good resource that not everybody does know about. So that is another place to look. And I don't know if we shared the links in any of our slides, but if not, we certainly can.
Yes, those will be in the slides at the end after we conclude Q&A. We have some resource slides that will have that. That is a great resource in response to, I see a question about the bank's responsibilities for reporting suspicious activity on the report, on the account, and that the FinCEN advisory as well as the CFPB report and advisory about suspicious activity reports are the best references in terms of bank's responsibilities for suspicious activity reports. So we'll show those shortly after we finish answering the questions. And I see Nicole just put one of them into the chat, the FinCEN advisory that Louisa mentioned.
And I also mentioned the FinCEN advisory on check fraud too. And I don't have the link like right here. I can grab it and put it in the chat while somebody else answers the next question.
Great. So the next question is about a scam that the person has seen increasing, and that's the scammers washing checks sent out by Treasury. How can older Americans protect themselves against this trend?
Do you want to start, Louisa? I've heard some tips about what type of pen you use to make sure it can't be washed as well. And
Yeah, I will say
other...
I don't have all of the specifics in front of me in terms of like all of the best practices. A really important one is, checking your mail. If you know when you're expecting a check, to check on that. But I will say, I'll wear a different hat, which is you can avoid getting checks by having your payments direct deposited into a bank account or credit union account. And, we certainly encourage seniors and other people to be taking their, their Social Security checks, their tax refunds, and other types of payments. Those could be direct deposited. It's faster and safer. And then this, to some extent, this check issue goes away. It doesn't entirely go away, but I would encourage people to think about that. And if you are working with seniors and they're getting a check on a regular basis, you might want to encourage them to look into getting an account where they can get that direct deposited.
And I just compliment what Louisa just said. The FDIC has a get banked effort, get direct deposit effort, and you could check that out. Encourages folks to avoid those kinds of problems. I believe the FDIC has a team, and we can provide more information on that particular problem later if necessary. And then finally, I'd say this is a particular topic I think that you might see in consumer news that we publish. And so you might want to sign up to stay on top of those kinds of questions.
Yes, and I was just going to add, one tip is to use black gel ink. Apparently that's harder for scammers and criminals to wash out. But as Louisa and Ron were saying, another way to avoid it is by not using checks. It's also a good reminder for people to, not sign blank checks, not write checks out to cash, things like that. That's easier for people to mess with and redirect your funds if you write a check like that.
We have a couple questions about complaints. So the first, and I know Louisa talked a little bit about this before, but can you anonymously submit a complaint on behalf of an older American? for any of your agencies?
I believe you can, but one of the things is, at least I know for FTC complaints, if we start bringing an action against the company because we've gotten a whole bunch of complaints about that particular company, then it is helpful for us to have an actual name and actual contact information, because sometimes we'll reach out to those individuals to be witnesses or to get their statements in support of the case. So you can, but it's not as helpful. And plus, for the CFPB complaints, if it's anonymous, then when we send it to the financial institution, it's going to be hard for them to figure out who you're talking about and give a meaningful response.
I wouldn't know the answer, but you can always reach out to the FDIC and ask. You can ask if you can submit an anonymous complaint, right? And you can get your answer that way.
And I see someone asking about reporting non-banks like Cash App, Venmo. You can report those types of complaints to the CFPB. We have been seeing complaints against financial products and services like those peer-to-peer payment methods.
Great, thank you.
And you can also look at our, you can also look at our FAQs on Regulation E. Someone's asking what type of regulations they have. The CFPB issued FAQs on Regulation E, and some of that addresses to what extent things like Venmo and peer-to-peer payment methods are covered by Regulation E.
Great. All right, that looks like the questions that have come through. Thank you so much for answering. I know that you all shared a lot of great resources, so we'll make sure that along with the materials that those resources are sent out. And for any questions that may come up, you'll see as Lisa goes through these closing slides that there's contact information, especially as you're noticing any new emerging trends or issues and scams. So I'll move back to our slides.
Thanks, Nicole. So we're just going to wrap up with a few resources. First is our YouTube video archive. And if you're on this webinar, you will get a follow-up email with a link to the recording of the webinar. So if you missed the beginning or any part of it, you can watch the whole recording through the link that you'll get. And you can also watch our older prior webinars as part of our Elder Justice Network's webinar series if you go to either the CFPB live page on YouTube, or I think the easiest way to go to it is to go to consumerfinance.gov/elder networks. And at the top of that, you'll see how to get to our YouTube videos for Elder Justice Networks. We also have 2 more upcoming webinars. So if you registered for this one, you should be registered for these 2 as part of the series, and we hope you'll join us. On September 14th, there's going to be a webinar about the CFPB's brand new just-in-time housing guides, which give advice to older adults and people working with older adults about housing decisions at critical moments, such as loss of a spouse, or such as when they're trying to protect their equity, or if they're trying to pass on their home to their heirs. There are 4 different guides, and you'll hear more about them on the September 14th webinar at 1 o'clock Eastern Time. And we also have a webinar on reporting and investigating elder financial exploitation on October 12th. And that one you'll hear from APS and others about what does it mean to report elder financial exploitation, and how does that work, and how do you get the case investigated once it has been reported. So here are some of the resources that we mentioned throughout the presentation. First of all, if you want to find out if there's a network in your area, in addition to the map that I showed as part of our presentation, the Department of Justice, or DOJ, has an Elder Justice Network locator, so you can find out if there's an Elder Justice Network in your area and how to connect with them. Also, if you want to check out the online network development guide that I mentioned, you can find that at consumerfinance.gov/elder networks. And then here's a link to that financial institution guide that we were talking about, as well as the FinCEN advisory, which was put in the chat, and 2 videos. If you want to see some videos about how St. Louis and other places started networks in their area and what that looks like, you can check out those videos on YouTube as well. And finally, this is the contact for the Office for Older Americans, as someone was asking about how do you bring to our attention certain emerging trends or other issues. You can email us at olderamericans@cfpb.gov. You can also find all the resources that I mentioned, the CFPB resources, at consumerfinance.gov/olderamericans. And as a reminder, you can file complaints with our agency at consumerfinance.gov/complaint. And finally, you can get answers to a lot of other questions that we've covered today or haven't covered today at consumerfinance.gov/askcfpb. So with that, I want to thank everyone for your time and attention today. We hope you'll join us for future webinars, and we hope that you found today's information helpful in terms of learning how you can work with federal financial regulatory agencies in order to combat elder financial exploitation in your community. Thank you, everyone. Have a good day.